All right, let's talk about Ethereum. Right now, its price is a total puzzle. On one hand, it really feels like it could just keep dropping. But then you have some analysts throwing out these wild predictions for crazy new highs. So, what is actually going on here? Let's dive in and try to figure it out.
And this really is the big question for anyone holding or watching ETH, right? Are we looking at a solid support level, a real floor? Or is this whole thing just a value trap, ready to snapshot on us? We're going to break down both sides of this argument, looking at what the analysts are saying and what the on-chain data is telling us.
Okay, so before we can even think about where we're headed, we got to get a handle on where we are right now. And honestly, the market is in this anxious stalemate. Nobody seems to know what to do. I mean, look, the overall trend is not great. It's pretty bearish. Ethereum's been on a 6-week losing streak, and it's trading below those really important moving averages. For a lot of traders, that's a huge red flag. It basically screams that the sellers are running the show at the moment.
So let's dig into that idea a little more. What's the case for an even deeper correction? Well, if you look at most of the technical analysis out there, the general feeling is that, yeah, this thing isn't over yet.
And what's really interesting is this idea of corrective rallies. What does that mean? It means even when we see the price pop up a bit, the consensus is that it's just a blip, a temporary bounce inside a bigger downtrend. It's not the start of a new bull run. For now, it seems like all the momentum is with the bears.
So here you can see the key battleground zones that analysts are keeping a close eye on. Down below, you've got support. That's where buyers might show up, somewhere between, say, $1,670 and $1,800. But on the flip side, if the price does manage to rally, it's going to hit a wall of resistance, a lot of selling pressure, somewhere between $2,150 and $2,400. Whichever one of these levels breaks first, that's probably going to signal the next big move. Okay, so the short-term picture looks kind of grim, right? But this is where the story gets really, really interesting. What if a huge crash isn't actually the end? What if it's the beginning of the next chapter? We're about to look at this totally radical long-term theory from one analyst that just flips this whole bearish idea upside down. Get this. It suggests the only way to get to a $15,000 Ethereum is through a massive, catastrophic crash first. Yeah, you read that right. $600. This theory predicts Ethereum could drop another 60% from where it is now, all the way down to $600. I know, it sounds like an absolute disaster. But, and this is the key, according to this theory, it's a completely necessary evil. And here's why. Here's the payoff. That absolutely brutal drop is seen as the one thing that could set the stage for the next massive bull run, one that could target anywhere from $10,000 to $15,000. So the question is, how on earth do you get from a total crash to a record-breaking climb? Okay, here's the logic behind it. A crash that big, we're talking a nosedive to $600, would trigger what's known as full market capitulation. Basically, it's that moment of pure panic where everyone, even the diehards, just gives up and sells. This process completely washes out all the weak hands. It resets everything, and it creates this huge opportunity for the strong hands, the long-term patient investors, to scoop everything up at a massive discount. So here's how that path looks broken down. Step 1, you get that major macro correction. That triggers Step 2, the full market capitulation, the panic selling. That's followed by Step 3, a long, quiet period of accumulation, where the smart money is just buying and buying. And only after all that is done can you get to Step 4, a brand new, supercharged bull cycle. Now, it's super important to get the timeline here. This isn't something that's supposed to happen next week or next month. No way. This is a multi-year vision. This whole cycle is expected to play out over the next, say, 4 to 5 years, with a potential peak way out in 2028 or 2029. It's a long game. All right, so now we have these two completely different narratives, right? One is this slow, grinding correction. The other is this crazy, catastrophic reset that leads to an incredible boom. So what does the actual data tell us? Can it give us any clues about which path we're actually on? So just to recap, here are our two competing stories. On one side, you have the gradual correction. The price kind of hangs around where it is, maybe drifts down a bit more. On the other side, you have the drastic reset, a massive, painful crash that's meant to clear the decks and build a much stronger foundation for what comes next. So to try and figure out which one is more likely, we can look beyond just the price chart. We can look at on-chain data. This stuff shows us what people are actually doing on the network, and believe me, what's been happening recently is pretty telling. Check this out. We've seen a huge spike in active addresses on the Ethereum network. I mean, the number of people using it has just shot up to a multi-month high. And historically, when you see a spike like this, it almost always means one thing. Big volatility is coming. The market is winding up for a major move.
But, and this is the really critical part, we're seeing what's called a divergence. All of this new activity, all these people showing up, it hasn't pushed the price up at all. So what does that mean? Well, one way to read it is that this isn't a wave of new buyers. It's a wave of panicked sellers, those weaker hands we talked about, all heading for the exits.
And all of this brings us right back to our main question. We've got all these conflicting signals. So how are we supposed to make sense of what the market is doing right now?
The bottom line is the market is just screaming indecision from every angle. You can see the price is getting squeezed tighter and tighter inside this symmetrical triangle pattern. Key technical indicators, they're totally flat, showing zero momentum. And the on-chain data shows a ton of activity, but no real money flowing in. We are absolutely at a critical inflection point.
And so we're left right where we started, with that one big question. Are we looking at a vital support level, a solid foundation for the next leg up? Or is this just a really convincing value trap right before the floor falls out? All the data suggests a huge move is right around the corner. But which of these stories the market decides to believe, well, that's the billion-dollar puzzle.